Welcome to the Deep Dive. Today, we're jumping right into something pretty significant, shaping, well, everything in tech right now. NVIDIA's fiscal year 2025 performance.
Yeah, we've got their annual report here.
Exactly. And our goal is really to pull out the key insights, understand where they stand, where they're heading, especially with this whole AI explosion happening.
And what's really striking about FY25 for NVIDIA, it's not just the sheer size of the numbers, but how they've sort of cemented themselves right at the heart of this AI revolution.
Yeah.
We're seeing their tech everywhere now: cloud, health, robotics, cars. It's spread out.
It really feels like their breakout era, doesn't it?
Well,
Moving from just being a component maker to like a fundamental piece of this new AI infrastructure.
Totally.
So we've got the report, NVIDIA's 2025 annual report, and we're going to try and unpack these numbers. We'll aim to make it clear, even if, financial reports aren't your usual reading material.
Okay, sounds good. Where should we start? Maybe the big number.
Let's hit that headline figure first. Total revenue for the fiscal year, $130.5 billion.
Wow. Okay, $130.5 billion.
It is.
Okay.
But check out the growth from last year. That's a 114% jump from the $60.9 billion in FY 2024.
114%, so they more than doubled.
The increase in revenue this year was actually more than their total revenue from the year before.
That's hard to wrap your head around. Just shows the acceleration, right?
Absolutely. And if we zoom into the last quarter, Q4 FY25, the momentum was still there. $39.3 billion in revenue just for that quarter.
Okay, $39.3 billion. And how does that compare?
That's up 78% from the same quarter last year and still up 12% from the previous quarter, Q3.
So still growing strongly quarter over quarter, too.
Yep. And the engine behind all this, pretty much one thing, right?
It's got to be data center.
Bingo. Data center.
So what were the numbers for that segment in Q4?
Data center alone brought in $35.6 billion in Q4.
35.6 out of the $39.3 billion total.
Yeah. The growth there was 93% compared to Q4 last year.
93% growth. Okay. And that means it's making up, what, almost all their revenue.
Over 88% of NVIDIA's total revenue is now coming from the data center segment. It's huge.
So what's fueling that specific boom? Why the data center explosion?
Well, it boils down to AI compute, doesn't it? Just this massive, almost unending demand.
Right. You've got the cloud giants needing more and more power, enterprises trying to build AI into everything.
Researchers training these enormous models,
Yeah.
they all need NVIDIA's hardware.
And the new tech, like Blackwell, that seems to have hit the ground running.
Oh, absolutely. The report mentions Blackwell generating billions in sales in just its first quarter.
Billions already. That's incredibly fast adoption. Shows how badly people want that next level of performance, especially for AI.
Okay, so revenue is, frankly, off the charts. But just bringing money in isn't the whole story, is it? How are they doing on profitability? The bottom line.
Yeah, good point. Growth is great, but you need efficiency too. And they're definitely delivering there. GAAP net income, that's the standard accounting profit, hit $72.9 billion for FY25.
$72.9 billion. Up from what, last year?
Up from $29.8 billion in FY24. So that's a 145% jump in profit, even faster growth than revenue.
Wow. 145%. And what about earnings per share, the EPS?
EPS came in at $2.94 DAP and $2.99 non-GAAP. Important to remember, these numbers are adjusted for that 10-for-1 stock split they did back in June.
Right. Good point. And Q4 specifically?
Q4 EPS was $0.89, still up 82% year over year. So strong profit growth continued right to the end of the year.
And another number that really jumped out at me was the gross margin.
Oh, yeah, 75% for the full year, 75% gross margin.
That's incredibly high, isn't it?
Yeah.
Especially for a company that mostly sells hardware.
It's exceptional. I mean, lots of software companies aim for maybe 70%, and NVIDIA's hitting 75% selling complex chips and systems. It really underlines their pricing power and just how critical their products are right now.
And they are spending more, right? Operating expenses were up.
They were. $16.4 billion for the year in operating expenses, investing in R&D, sales, all that.
But even with that increased spending,
their operating income was still over $81 billion. So the profitability engine is just incredibly strong, even as they invest more.
Okay, so the core AI data center business is booming and highly profitable. But is that like their only bet? Or are they building strength elsewhere too?
That's a key question. And yeah, the report definitely shows they're not just a one-trick pony, even if that one trick is amazing right now. They're investing strategically in other areas.
Like gaming. That used to be their bread and butter. How's that looking?
Well, gaming in Q4 brought in $2.5 billion, which was actually down 11% year over year.
Down. Okay. Is that a worry?
Maybe not. The report kind of hints it might just be temporary, maybe people holding off for the next big thing.
The next generation of cards.
Exactly. They've announced the new GeForce RTX 5090 and 5080 based on that powerful Blackwell architecture. Plus, they're pushing things like DLSS4, that's their AI upscaling for games, and NVIDIA Reflex 2 for lower latency.
So still innovating heavily in gaming, especially with AI features.
Yeah, and they're also really emphasizing RTX AI PCs, trying to bring AI agents and tools right onto our desktops, not just for gaming.
Interesting. Okay. What about automotive and robotics? That feels like a big future play.
Definitely. And that segment saw really strong growth. Q4 revenue hit $570 million.
570 million. And the growth.
Up 103% year over year. So it more than doubled.
Wow. What's driving that?
A big piece is validation in autonomous driving. You've got major players like Toyota and Hyundai now building future cars using NVIDIA's Drive AGX Orin platform. That's a huge vote of confidence.
Yeah, getting designed into major car lines is a big deal.
And it's not just cars. They launched NVIDIA Cosmos.
Cosmos. What's that?
It's described as a generative platform for robotics and physical AI, basically tools to help build and train robots. And they're partnering with companies like Uber, Wabi, Agile Robots. Seems like they want to be the foundation for smart machines, too.
So data center, gaming, automotive, robotics. Anything else significant?
There's also professional visualization. That was about $511 million in Q4 revenue.
Okay, and growth there.
More modest, but still positive, up 10% year over year.
What's interesting happening in ProVs?
They highlighted something called Project Digits, positioning it as a personal AI supercomputer.
A personal AI supercomputer.
Yeah, and using their Omniverse platform and these things called generative blueprints to power robotics development, media creation, basically making high-end AI tools more accessible for professionals and creators.
So across the board, even outside the main data center surge, there's quite a lot of activity in strategic positioning.
Definitely. If you kind of step back, you see their influence isn't just in one market or one region. They're really going global.
Yeah, I saw they opened their first R&D center in Vietnam.
Right, tapping into global talent. And think about this. Their tech is now inside 75% of the TOP 500 supercomputers globally.
75%. That's dominance in high-performance computing.
Pretty much. And the partnerships are key. All the big cloud providers, AWS, Google Cloud, Azure, Oracle, even newer ones like CoreWeave, they're all deploying NVIDIA's latest GB200 systems. They have to meet AI demand.
So the cloud giants are huge customers.
Massive. But it's also beyond tech. Look at healthcare. They're partnering with Mayo Clinic, IQVIA, Illumina, using AI for things like genomics and finding new drugs.
It really feels like they've become the essential supplier, doesn't it? Like you said earlier, the shovel seller in this global AI gold rush.
That sums it up pretty well. They're providing the fundamental tools that everyone else is using to build AI applications.
Okay, so with all this growth, all this investment, partnerships, they must need a really strong financial base. How's their cash situation?
Very, very healthy. They ended the fiscal year with $43.2 billion in cash and equivalents on hand.
$43 billion. Wow. And cash flow.
Operating cash flow was $64.1 billion for the year, which led to free cash flow, the cash left after investments of $60.7 billion.
$60.7 billion in free cash flow. How does that compare to last year?
It more than doubled from FY24. Just shows how much cash the business is generating right now.
So what are they doing with all that cash?
Well, they're returning some to shareholders. They paid out $834 million in dividends over the year.
Okay.
And they did significant stock buybacks over $33.7 billion worth.
$33 billion in buybacks? That's substantial.
It is. But crucially, even after dividends and massive buybacks, they're still investing heavily in R&D, making acquisitions, and their cash pile is still huge. They've got the financial firepower to fund pretty much whatever ambitious projects they want.
Gives them a lot of runway for the future then.
Absolutely. No financial constraints holding them back right now.
So that's the look back at FY25.
Yeah.
What about looking forward? Did they give any guidance for the start of FY 2026?
They did. For the first quarter of fiscal 2026, they're guiding for revenue of around $43 billion.
$43 billion for Q1. That's even higher than the record Q4 they just had.
Yep. $43 billion plus or minus 2%. So they clearly expect this strong demand to continue.
Any word on margins for next quarter?
They expect non-GAAP gross margin to be around 71%, still very strong, even if slightly down from the FY25 peak.
And operating expenses.
Wait a minute.
Still investing.
Looks like it. They guided for about $5.2 billion GAAP and $3.6 billion non-GAAP operating expenses in Q1.
So the overall message from the outlook seems to be continued confidence, continued strong demand for AI stuff.
Exactly. They seem very confident that the need for AI compute isn't slowing down. And their strategy, it's clearly not just about selling chips anymore.
Right. It's about the whole package.
Yeah, building these whole AI platforms, the whole ecosystem, hardware, software, libraries, tools, that integrated approach seems to be their key advantage.
Okay, so let's try and wrap this up. What are the main takeaways from this deep dive into NVIDIA's F125?
Well, I mean, the headline is just phenomenal financial performance, record-breaking stuff, and it's clearly driven by this absolute explosion in AI demand, particularly in the data center.
Right. Incredible growth.
But it's also the profitability that's super high margin. Plus, the strategic moves diversifying into auto, robotics, provis, even while doubling down on AI.
And the global reach, the partnerships everywhere.
Exactly.
Yeah.
Strong financial health, tons of cash, and a really optimistic outlook based on their guidance. They seem to be firing on all cylinders.
It really hammers home just how central they've become to this whole AI era, doesn't it? They're literally building the foundations for whatever comes next. This past year wasn't just growth, it felt like, a consolidation of their importance.
Absolutely pivotal. They're the infrastructure for the AI revolution right now.
Which kind of leads to a final thought, maybe something for listeners to chew on.
Okay.
With NVIDIA being so central, having so much influence, what does that actually mean for the future?
Like the broader implications.
What does it mean for innovation if one company holds so many keys? Does it help or hinder? What about access to these powerful AI tools for, say, smaller companies or researchers?
That's a really important point. Does their dominance create bottlenecks, or does it accelerate things by providing a standard?
Right. And what other challenges or maybe unexpected opportunities pop up when one company is just so fundamental to such a transformative technology like AI?
Yeah. It's definitely something worth thinking about as this AI wave continues to build. What does this level of influence really mean for all of us? Good questions to ponder.